Spring is historically a strong season for the real estate market as buyers are out shopping and homes have strong curb appeal, and we see good, healthy competition. Sellers are busy adding the final touches and staging their homes and really ready to test the market. But with interest rates still being uncertain, you would think that Ottawa's housing market would be on pause, right? Well, after the Ottawa Real Estate Board released its numbers for May, it looks like it's a different story. Stick around. Welcome back to the channel. My name is Andrei, and today we're going to take a look at an updated housing market report for Ottawa for the month of May. And I'll be completely honest, when I saw the numbers, I was pretty shocked. Because we're coming from a market where in the last 12 months, we saw something that's never happened before. And it's normal to predict that it would take much longer for the market to rebound. But I was wrong. Here we have the month-over-month comparison for Ottawa. On the left-hand side are the different asset classes. So we have detached homes, semi-detached homes, townhomes, condos. DOM is days on market. So how long does it take for a home to sell on average? MOI is months of inventory or how much supply we have. And the number of sales is our transactions for buying and selling of the homes. I want to start with the number of sales because this is where we see how much active that the market is month over month. Has it increased or decreased? So since January of this year, I mean, we started pretty low, 606 transactions. We slowly started to increase. March is when Bank of Canada made a pause in the interest rates, and we saw an influx of buyers come back aggressively. These are the same buyers that were on the sidelines for the last 6 months. They were waiting for the time to get into the market. So March is where we saw the market start to pick up. So we were at just below 1,200 transactions. In April, we went up to almost 1,500. And May, last month, we were almost at 2,000 transactions. So the last 3 months from March to May is a steady increase. And our market is showing that it's very active. Now, let's take a look at MOI, months of inventory. I talk about this all the time. It is a very important indicator. It really dictates the type of market that we're in. So in March, we were at 2.6 months of inventory. That is kind of, in the middle of a seller's market. A seller's market is anywhere from 0 to 4 months of inventory. 4 to 6 months is a balanced market, and 6+ months is a buyer's market. So we're right there in March in the middle of a seller's market. We dipped down to below 2 months in April and dipped again 1.4. Now 1.4, what that means is that our supply every month since March is going down. So there are less homes for buyers to choose from. And the result, of course, is much more aggressive competition. We're seeing bidding wars. We've actually started seeing bidding wars late March into April, and it is now quite common to see bidding wars. Nothing crazy like we saw about a year ago, but they are still there and something for the buyers to be aware of. Days on market. Again, let's start in January. 44 days on market. We are all the way down to 23, so essentially half of what it was in January. This is going to give you an idea of how long on average the homes are on the market before they sell. Now, it is going to depend on the geographic area, the pocket in Ottawa where that home is, the condition, and other factors, but overall, it's going to give you an idea. And what we understand from these numbers is that it's taking less time for the homes to sell. Now, let's look at the average prices. Detached homes back in March were trading at $751,000. They increased by about $50,000 into May and dropped down a little bit in May. Now, semi-detached homes, an asset class that I talk to about all the time, an asset class that a lot of buyers skip out on. I don't think it's intentional. I think you're just kind of unaware, but it is a great asset class option because it's a great upgrade from townhomes. You're going to get more square footage. You are essentially a corner unit. You only have neighbors on the one wall. So you're getting a little bit more for that. Now, what's very interesting from these numbers is that in May, it actually dropped in average price compared to April. And, if you're a buyer out there and you're considering between townhomes, which are at about $622,000, I would definitely look at semi-detached home as a better investment in today's market. Now, townhomes did increase just a little bit from April to May. And again, pretty much, since February, we've seen an increase. Townhomes is probably our most popular asset class. Great starter home for families. It's also great upsize if you're coming from a condo. Condos in March were trading at $418,000. In April, they went up to $435,000, and they increased again to $442,000. So again, the condo asset class a very popular option for buyers. It is your best shot at getting into the market. I know that the interest rates have slowed down, or they've decreased the purchasing power for a lot of buyers. Since the interest rates have increased, maybe you're down $100,000 in purchasing price. So if you're hoping to get into townhomes and you can't, condos are still a great way to get into it. They hold their value very well. If you sit on this for a couple of years, you would have an opportunity to move up later on as your equity builds up. So overall, May is showing us that it is an active month. It should give us a good indication of what to expect in June. Even though we did recently have a small rate increase, I don't think it'll be enough to just stop the momentum completely. But again, we'll see. Months of inventory is very low. Transactions are up. Days of markets are low. This will give you an idea of what's happening and what you can expect if you're thinking about making a move in June. What are your thoughts for the upcoming summer market? Bank of Canada just raised its rate after being on pause for the last two announcements. Will this slow down the momentum for June and the rest of summer? Will we see a strong fall market as consumers take a break and enjoy their summer? Will home prices rise again, or will interest rates stop the frenzy? Drop your comments below. Thanks for watching, and catch you in the next one.